In an effort to expand their reach, the Kenya Revenue Authority has set up a team targeting tax evaders in micro and small-scale businesses. The team, which will be led by KRA Commissioner George Obell, hopes to see the contribution of the sector to domestic taxes increase from the current 14%. And as Jimmy Mbogo now reports, the taxman is expected to employ numerous measures to monitor transactions in relation to tax compliance.
The Kenya Revenue Authority has now trained its guns on the informal sector of the economy to raise more taxes. KRA now targeting businesses and individuals with a turnover of 200 million shillings and below in its effort to widen the tax net. According to the Acting Commissioner of newly formed KRA Department of Micro and Small Taxpayers, George Obell, despite the high number in registered taxpayers, the contribution of the sector in tax revenue has remained negligible.
What we miss on the large and medium is the numbers. The numbers are on this other side.
Yeah.
So, for example, if you look at our pins, we have pin holders, we've got about 20 million, pin holders now 21 million. And in those, many of those, I think, are the small and medium, small and micro taxpayers. Now, these are the ones we want to focus on. And if you look at their contribution today, if you look at the entire basket of domestic taxes today, you see, the medium, large and government entities are giving us just about 86%. Now, all these other numbers are giving us 14%.
The taxman is now set to deploy numerous strategies to monitor transaction of micro and small taxpayers and ensure there is no under-declaration of revenue. KRA notes that although some have registered for their personal identification number, that is the KRA PIN, some have not been shouldering their burden by filing nil returns. A challenge that the taxman is now hoping can be addressed through information sharing on assets such as land and motor vehicle, which are already in government systems.
And how to address this is we are looking at the data that is available. And in this day and age, data is gold. You've got information when you're doing transactions at every level, that information or that transaction will be picked out. So, for example, let me give you a simple example. If you offer services to an established business, and the services is a service that attracts withholding tax, they are going to do what? They are going to withhold and remit. And they are going to ask you for your PIN and use that information to remit that. Now, that withholding tax, 3% or 5%, is not a final tax. So we already are expecting you that at the end of a period, you go to file and declare the total income because you can work it back and see.
In the new revenue push, KRA will keenly focus on government suppliers, transport sector players, as well as those in the ICT and agriculture sector, with the taxman set to incentivize consumers to seek valid fiscal invoices, which will in turn bring more visibility in those sectors.
You've got to reach them out to where they are. And you've got to also find ways and means to be able to have critical points that you can then be able to reach them. Because you see, you find them in several ecosystems.
Now, in an effort to address the bottlenecks that small and micro enterprises have been facing in their tax compliance journey, the Kenya Revenue Authority hopes that this new department will be able to address those challenges, ensuring more participation from these sectors. Jimmy Mbogo, Citizen TV, Nairobi.